In this video, we're going to take a look at some more investment information, and primarily we're going to be talking about indexes, averages, and then we'll talk a little bit about brokerages and how they might work. So here we go with the next videos, right? So if you think about what we need, right? We're looking for some way to measure the stock market. We want to have an idea of how is the market in general performing. So that's what these indexes and averages do for us. They gauge general market conditions. So you can compare your portfolio's performance to that of a large diversified portfolio. Also, you can look at the market's history and use that as a guide to understand what you might think is going to happen in the future. But again, the purpose of this is to get an understanding of how the general marketplace is performing. And if your investment portfolio mimics that of the stock market or has a relationship very close to the stock market, then you would expect your portfolio to move the same direction that the stock market does. And of course, we're going to talk about some of these numbers, the stock market averages and indexes. So an average reflects the average arithmetic average price return of a representative groups of stocks, and then an index measures the current price behavior of a group of stocks in relation to a base. So one looks at price behavior at a point in time, and the other one looks at the current price behavior relative to a time in the past. So the first thing we can talk about is the Dow Jones averages. The one that's most common that you hear about the most is Dow Jones Industrial Average. It's made up of 30 stocks. They're the biggest stocks that there are. And this is what's referred to as a price-weighted average. So the stocks with higher prices get more weight than stocks with lower prices. So when this number is calculated, and again, you can see the formula here, you get the closing share price of each stock, and there's 30 of them, and then you divide them by this divisor. Now what the divisor does is it takes into account things like stock splits and any changes that might happen because of mergers, bankruptcies, etc. So that number, that divisor, adjusts it. So now we can make comparisons to the past since we know this number, again, in quotes, adjusts it for us. So, and there's lots of other Dow Jones numbers. There's a transportation utility index, right? They also have different sectors. They look at large cap, small cap, etc. Right? You can find different economies, international types of relationships and indexes. So the Dow Jones Company creates these numbers that help us understand how the underlying influence or the underlying market is performing. Standard & Poor's has an index. And again, many investors look at this as a more broad-based representative number. And in most research, the S&P numbers are used rather than Dow Jones. But when we talk about the average stock market return, we're typically reflect or look at the S&P number for that information about what we think is going to happen in the stock market. So the S&P 500 index is the common stock index comprising 500 large, not necessarily the largest, companies. And again, they do the same thing. They find the closing market values of the stocks and they divide it by a divisor. Again, the idea here is to make comparisons of your portfolio to this number to get an indication of how your portfolio might be moving. And again, there are lots of Standard & Poor indexes. So there's a variety, the mid cap, small cap. We can look at a total market index. the S&P Total Market Index has all stocks that are listed on the New York Stock Exchange and NASDAQ. It's everything. So again, there's lots of these indexes out there. You know, you have to try to pick one that you think reflects your needs, and then that's the number that you concentrate on. Now, what we can do is we can also look at over time, right? So here is from April 2013 to April of 2015. As you can see here, the red line is the S&P 500. The blue line is the Dow Jones Industrial Average. And you see that they both move relatively the same up and down. But if you look, the slope of the S&P 500 is a little bit higher during this time frame than the Dow Jones Industrial Average. The S&P 500 was growing faster than the Dow Jones was. Now, if we switch that from 2017 to 2019, we see that now that has switched a little bit. If you look at the slopes are pretty close together, and of course they do move in conjunction with each other, but the slopes are a little bit closer together. But now, over this 3-year period, the Dow Jones is performing better than the S&P 500. So again, there's lots of ways that we can measure this. The time that you pick is the thing that's most important when you want to make some type of analysis or make comparisons. So if you want to understand these indexes, again, we need to know what's out there available, right? The New York Stock Exchange and the NASDAQ Exchange, again, they represent the movement of those things that are in those exchanges. And again, within those exchanges, there are subcomponents, right? So in the NASDAQ, you can actually find a biotech index from those companies in the NASDAQ who are biotechnology companies. So there's lots of places to find this information. Value line indexes, right? These are stock indexes. These are actually constructed with what's referred to as equally weighting the price. So each stock has its own relationship that's an equally weighted distribution. And the idea here is to eliminate the bias of those stocks that have very large market values. So this might be, again, something that's a little bit more general, right? So it's not influenced by those big ticket stocks. There's the Russell companies. The Russell 1000 is the 1,000 largest companies. The Russell 2000 are 2,000 small to medium-sized companies. So if you kind of think of it, the Russell 1000 is the first 1,000. The Russell 2000 is the next 2,000. And the Russell 3000 is the 3,000 stocks. So again, this is just to point out there are so many different indexes and things to look at. We can look for bond yields, right? There's a Dow Jones Corporate Bond Index that's an equally weighted index of 96 corporate bonds, 48 industrial bonds, 36 financial, 12 utility. Again, the idea here is this number is going to give you a general indication of where the bond market is going relative to yields. So let's change directions just a wee little bit here for the rest of this video, and let's talk about how we make transactions. So we need to understand how you actually make the security transactions so that we can find those good investments and obviously take action, right? To get something done. So what's the role of a stockbroker? And sometimes people are a little mixed on their views of stockbrokers. I don't typically think of a stockbroker in general as being a finance person. A stockbroker, to me, essentially is more of a marketing person. Their job is to sell securities. Now, certainly they want to try to match needs, but they don't necessarily need a finance background to understand why they're selling a stock. They're told, these are good stocks, these are the ones we want to sell. So when you place an order with a stockbroker, they're the ones that ultimately initiate the trade itself. Now, are these the same stockbrokers who give you financial advice? Maybe not the same person. Maybe there's another advisor that you would work with. If you're thinking about transactions of things like in the NASDAQ, again, these are done, again, during business hours at different brokerage houses. And of course, they're done on a computerized network, as we've talked about in the past. So what kind of services can you get? Right? The primary service, obviously, is to execute trades. We can also, maybe we want them to keep certificates, right? So the certificates of the stocks that represent your ownership, typically you don't receive those. Typically they are kept at your brokerage house's vault for safety, if you will. But also, we talked about short sales in a previous video. These are the shares then in this street name, is what it's called, that can be used to help fund and act on short sale requests. Of course, there's research, there's information we can get. They're going to provide us with some statements about what's going on. So the types of brokerage firms, a full service broker is going to do everything that you could possibly want for them to do. Now, of course, you have to pay for that. Typically, there is a pay per transaction, but there's also pay or fees associated with the services that you acquire. A premium discount broker, again, they're going to charge a little bit, maybe lower commissions. They're going to have limited amounts of research and advice. They're just a step down from the full service broker. And a basic discount broker, typically referred to these as deep discount brokers, essentially all they do is make trades. So, what kind of service do you need? All of these services have fees, right? Even the basic discount broker, right? Their job is just to make trades. But you have an account at that brokerage firm. That account needs to be, in quotes, managed, right? So there's going to be an administrative fee for having an account at a brokerage firm. So there are fees that are loaded into all of investing, right? Again, if a phrase I've probably said a bunch of times already, there's no such thing as a free lunch. Everything costs money. So how do you choose a broker? You need to try to find someone who understands your investment goals, right? They need to be able to consider your investing styles, right? You're going to have to pay for fees. So you might as well assume the more information you want to get, the more help you get, the more it's going to cost for you to get that information. Now, if it's good information, your returns will ultimately compensate you for those expenses. And in the end, I think how most financial service professionals get clients is through word of mouth and referrals, right? So if I wanted to start investing and I'm looking for somebody to help, I'm going to try to find somebody that has a broker and ask them for some information about that broker. Again, in the end, you don't want to give the stockbroker too much control, though, right? They make money when they act. So if you give them permission to make trades for you whenever they want to make trades for you, that could open you up for something that's referred to as churning. This is where they make trades, maybe more frequently, a little bit more excessive kinds of trades, and every time they trade, of course, they get paid. So again, selecting a stockbroker is not difficult, right? But you do have to do a little homework to make sure you choose the right type of person. That's the end of this video.